I've been a business journalist for almost 7 years now, and I still distrust the stock market completely. See how panicked everybody is with the stock market crash? Well, my money is all safe because I invest in PPFs and FDs. I am, however, thinking about investing in an SIP, and so I thought I decided to ask Monika whether this is the right thing to do. Remember, I don't want to invest in a mutual fund.
Right, so you want an SIP, but you don't want a mutual fund, and that is a contradictory statement, Vidhi, because SIP is a route to a mutual fund product. Okay, a mutual fund will then further invest into stocks or bonds or gold. Right. So, but I think your real worry is about the risk, the volatility,
yes,
the fear factor of the stock market. What you actually need to know that there is a way to invest in a safer way in the stock markets if you plan to hold your investments for at least 5 to 7 years. You say that you're a fixed deposit PPF investor. What is your rate of return? What interest do you get?
I think about 6 to 8%.
6 to 8, so 6 in the FD and 8 in
the
PPF.
Yeah.
Right, so if we take a point-to-point return from the time that the Sensex started till today, the average annual return is about 15%. Okay, so you double your money every 5 years if you get a 15% return. If you get a 6% return, your money doubles in 12 years. That's the kind of difference. What is the problem with getting a 6% return? What do you think the historic rate of inflation in India has been? It's been about 6%. So what's happening to something called a purchasing power? When you go out with 100 rupees today to buy a coffee, and then you go after 5 years, you need more than 100 rupees. You need like 120 rupees because there's been inflation. Now what a fixed deposit does is that it'll give your money back with a return, with an interest, but it's not protecting your purchasing power. So equity stocks is one route through which your purchasing power is protected and you get inflation plus returns. That is why somebody who's at your age and stage definitely must have a large allocation to equity.
Yeah, from what I understand, you're saying there is lower risk. But what about these headlines and what about the stories that we hear about money getting wiped out completely?
Right, so money gets wiped out if you go directly into one stock. But if you take a route through a mutual fund where there is diversification, which means that you're buying a basket of stocks through the mutual fund, then your risk is far lower. And the risk that we also need to remember is about inflation. I've just spoken about that. So there are different kinds of risk in the market. The stock market will protect you against inflation, but you need to choose carefully the product which lowers the risk of volatility. And you need to always think very long term for approaching the equity market.
Right, so funds. I'm not sure I'm entirely convinced, but I'm sure we can keep talking about this. But for now, I have an audience question of the week on the same topic. Nitesh Menda from Mumbai is asking, is it safe to be investing in mutual funds right now, or should he withdraw?
Okay, safe to be investing in mutual funds right now. A lot of things to deconstruct here. You always have to be invested in mutual funds. There is no right now or later. The mutual fund will invest into stocks, into bonds, into a mixture of the two. So when you're building your portfolio, you're actually buying different kinds of mutual funds. Right? So you'll buy a pure large cap fund, or you'll buy a small cap fund, which is pure equity. You can buy a balanced fund, which will give you some equity and some debt, which is safer. Or you can buy a pure debt fund. So mutual fund is a product which matches your need for a future goal with a product. So if I have a short-term need, then I will buy maybe an ultra short-term debt fund. Right? So there are products which will help me target a goal which is 2 to 3 years away. Suppose I'm planning for a retirement which is say 30 years away, then I will use a long-term equity fund. So the question actually should be, at my age and stage, what kind of funds should I be in? Not, is this a good time? It's always a good time. It's like saying, in a meal, what should I be eating? You have to eat a balanced diet. Mutual fund gives you that balanced diet.
Well, I hope Mr. Menda is happy with that answer. That is all we have for now. In case you have any further queries, you can write to us at moneywithmonika@livemint.com, and you can also tweet to us at @livemint.